Welcome back, everybody, to Be the Trader. Today, I have a very special guest, Mike Spinosa. Mike is a day trader and a coach/mentor. You might have seen him on Instagram. If you haven't, after today, be sure to look him up because you'll see a lot of great content. Mike, welcome to the show, man.
Appreciate it, buddy. Thank you for having me. I'm honored.
Absolutely. I want to start off by kind of getting to know your background, and if you could share with everyone, kind of telling us, where you come from and what got you into this game of trading. And let's go there.
Yeah, so I grew up in Long Island, New York, my whole life. Lived there. Was passionate about stocks. My grandfather used to be a big stock investor, trader, et cetera. So from a young age, he kind of rubbed off on me a little bit from that standpoint. And then I just knew I wanted to do something with stocks growing up. But we all know that, but we don't know what specifically, right? So I just did the typical college route, going to get a finance degree, economics minor. I went to Quinnipiac up in Connecticut, and then just graduated and tried to, do the 9 to 5 pretty right out of college, really. It was like heavily into the whole internship thing each summer. And I had a bunch of licenses. I had my Series 7, 86, 87, life and health. So kind of got a good taste of, the whole corporate side before I started trading, which is nice looking back on, but I don't. After seeing how some of these stocks move, it really did not help too much.
Yeah, absolutely. And so you went to school for finance with the goal of you wanted to be in the market somehow.
Somehow, right? Work on it. Everyone wanted to work at an investment bank or a hedge fund, right? Just because that was the sexy title,
Absolutely.
The power job. But I think people find out pretty quick it's not all that it really, is hyped up to be.
So these licenses that, as you said, you acquired, first of all, I don't know anything about any of those licenses, but what I will say is I was watching one of your videos a while back, and you mentioned that because of your experience of being in the corporate world, it kind of gave you a whole different perspective of what to look for. Could you explain what you mean by that in terms of being in the corporate world? Like, what's different over here than versus over here?
So I think it's mostly about technical analysis, because when I was an analyst, my job was a micro/small cap analyst, and the company I worked for, we don't have to name it, but they'd be like, here's a couple companies, value them looking at their financials. And then coming out of college, I'm just like, number one, I have no idea how to do that. Like value K-Swiss or some of these like local.com, which I don't think is even listed anymore. And then right away, I kind of figured out like, it doesn't seem like it matters, like if these companies make money or have cash or any of that stuff. So that was like my introduction to small caps in a way, and how there's really a disconnect, between, take my scanner off, a disconnect between fundamentals and technicals,
Yeah. So you're a young guy in the corporate world doing the fundamental analysis. Does any of that transfer to what you do now?
No, honestly. Today, for example, and even the past couple of weeks, like I've caught a bunch of offerings, and I don't look at fundamentals. I don't look at filings. So it's like, nice. It's all just price action to me, which I'm a big believer in simplifying, instead of overcomplicating things. And it's worked out so far.
So what year was it? So when you graduated college, to give us perspective, and you went to work at the corporate world, how long were you there for?
So I was an analyst for about 2 years, including like internship time. And then I was an advisor for maybe 3 to 4. And as an advisor, it was mostly like larger cap stocks, like American Airlines, Twitter, Facebook, Apple, and you'd look at the PE ratio and be like, oh, it's undervalued or this, that. But zero clue about technicals, cool. Like zero. So that was my introduction to trying to swing trade, if you will.
And so so a couple of questions come to mind, going back to where it was very, very unique that you were studying fundamentals of these small caps or micro caps. A lot of us trade, right? A lot of the listeners trade these stocks too. And so you always hear, I personally am kind of on the same line of you. I'm just price action only. I like it very simple. I hate all these lines. I like it simple. Yeah. And it's interesting that you studied fundamentals at the beginning and I realized, it didn't really matter. And then you switched over to bigger caps as an analyst, as you were saying. And did you see something I guess, do you trade big caps too now, or do you kind of just avoid those? Okay.
I'm like a micro small cap, under 2 billion market cap type trader.
Gotcha. And so after you stopped, I mean, you stopped after that next part when you were messing with the big caps and giving advice around there. You left, and then did you immediately start trading? Were you trading in between there by yourself, like while you were working those jobs? Like, can you give us a little understanding?
Yeah, so I think what I knew, I was just not happy at my job. You know, like any one of us, we go online, we start looking at Instagram, social media, and then those who may have seen my prior videos, like I learned from Cam Foose in terms of technicals, that these things can actually form patterns and actually become predictable or have some form of edge, right? So I basically studied for like 4 to 6 months and then decided to take the leap in terms of, you know, trying to do it full time. Which obviously is exhilarating, right? Most people ask me, like, how did you prepare? I'm like, honestly, my biggest term is it's trial by fire. There's no trial and error. It's, I'm going to throw you into the fire and you're going to figure it out, right?
So you left going full time without the experience in terms of showing that you were consistently profitable?
Yeah.
Really? Shit, man. That's crazy. That's awesome, man. I did the same thing.
Yeah.
So tell us about that. I mean, you leave, you start trading using technical analysis. Seems like that's immediately what you started to use. What was it like for you? How long did it take for you personally to find, you know, what worked for you?
So that's, I guess, the biggest part for everyone, right? Is like there's so many different strategies. I started with just longing year one, like simple triangle breakouts, like daily charts that have clear cut resistance lines. You'd look for the stock to break out in some type of consolidation. But like, I think when I first started, my goal was let me just be able to afford my monthly overhead, right? Like it wasn't like I want to be a billionaire by year 2, right? Or something stupid. So I didn't really have too high of expectations. And I think that's a big takeaway that most people should take away, because I think too many people come in and they want to just kill it, you know, and it's like, it's a process, like opening a pizzeria. You're not going to open up one, then open up 30, right?
Yeah.
And think you're going to become the next Domino's, you know? So I think the small mindset is what helped me be focused, not have high expectations, and then not blow up, you know, which is a whole other aspect.
So you found your success in longing, right, at the first year, and longing simple setups, like whether it's a breakout or on the daily. But now I'm curious on your thought process now on where you are at in terms of a couple ideas. Number one, since you're a technical based trader, are you also taking profits in a systematic way, or are you more so taking profits based off price action? How do you feel?
I basically take profits in a systematic way where I'm identifying support and resistance, mean reversion, trend gauge, and I'm a big believer in scaling. So, you know, like back to Mark Douglas, you pay yourself as the market makes money available to you. So I try and just keep it systematic as opposed to super greedy, and just keeping a ideal risk reward where usually 3 to 1 or higher type situations, you know?
Yeah. When you say 3 to 1, there's some people who might hear that and just think you're scaling out at 3 to 1, or are you scaling out on the way to 3 to 1?
Usually I'll have profit targets, and then this is where price action comes into play, right? Because you can have targets, but if the tape starts to look weak, you know, then I'll exit the trade completely and then re-enter if it starts to form back up. So it's definitely a little bit of intuition as well, which I think it's like some people are systematic, like spreadsheets, you know, millions of spreadsheets. I'm definitely much more of an intuition trader where the tape tells the story for me, you know?
Yeah, I do know that. And so you kind of just have been watching charts over and over, watching, you know, this level 2 over and over, that when you start to feel certain signs, whether it's stacking action, like on the bid or on the ask, or price action volume drops, whatever it is, then that kind of gives you another signal within your system to, you know, cut profits sooner or whatever it may be.
Yep.
So,
exactly.
so you're not strict on like, you know what, if it didn't get to my price target, I'm staying until it hits it.
And
or I'm staying until it hits my stop.
Not at all, you know, because I think what happens with longing is, and the reason I mostly short sell now, like I'm probably like a 70-30 short to long, because year one I've gotten dumped down so many times longing, you know, and you realize very quick that you can't be too patient with longs, you know.
Hell yeah.
You can be right, you know, and then you get that fake breakout, and then attribute that to why I'm a good short seller now is because I've gotten dumped on so many times.
Yeah, you finally get that break and you're like, hell yeah. And then 1 minute later, it took 20, 30 minutes to get there. And then 1 minute it just drops.
It's crazy. And I think that's the introduction to manipulation in a lot of these small caps, right?
Yeah. Yeah. And what's your thoughts on that in terms of, because everyone has their opinions. We all can pretty much agree that there's some sort of manipulation going on, especially when you see, we see SRNE that, if you're listening to the podcast, today is 5/18/20 at 3:20 p.m. And I can tell you that SRNE went from $2 to, what was it today? It was something
I think
stupid.
like 10 or something.
Yeah. It was just so dumb.
And traded like $3 billion worth on Friday, which to me is like, there's bigger players in these names now, right? That's not retail, you know?
Yeah. And they're just so beautiful setups, right? They're so beautiful that you can just tell that someone's playing with these numbers in some way. And then they'll suck those short in, and then they'll make it squeeze again. It's very interesting. So I love that you said that you have your profit target, but then you also pay attention, because if you get signs, red flags, you're out. And you're okay with getting out and getting half of your target, a quarter of your target, if it doesn't make sense to hold because of a sign, right? Because some people could hear this too and say, okay, well then I'm going to get in my stock and then get out as soon as I'm wrong, right? Or I think I'm wrong, but then emotionally get fucked, right? Where they're like, I think I'm wrong because this big bid just showed up out of nowhere. So they get out, and then all of a sudden it keeps going. Because I've been there back in the day where I just get out because I get scared of some fake bid or ask, and then I jump, and then I get more frustrated, and then they revenge trade because they think they deserve that. So how can you give cautionary tale to those people who are thinking that way right now?
I think that's where I'm a big believer in screen time, because you have to go through those experiences multiple times in order to get that idea of not getting shaken out, on top of being able to gauge larger time frame trends. Like, it's easy to look at a 1, 2, or 3 minute and think like you've gauged the stock, but I'll be looking at a 5, 10, 15, 30 hourly, 2 hour. And this allows you to see the bigger picture trend versus what's happening on the 1 minute. I don't find too much success on the 1 minute personally. And I think that too many people use the smaller time frames. That's why they get shaken out.
Do you mean you don't use the 1 minute? What do you enter with? Just curious.
Usually like a 2 to 5 minute.
Oh, cool. So are you? What's your average? You would say you're in and out. I know it changes, right? Sometimes today I was in SRNE from the top, not the top, but like 9 all the way down, and it was just a beautiful trend. But there's some days where I'm in and out in the first 2 minutes. So on average, like, what is your goal to be done with trading? Like in the first hour, what do you think?
I usually focus on the first 1 to 3 hours, unless I'm like all day fading something. It's very rare. I guess in this market, you don't really see too many long setups the last couple hours, Yeah. Intraday, you get squeezes, but I think the first 1 to 3 hours is where I make most of my money.
Cool. And so you're teaching and helping others, right now? Yep. Is that currently what you do?
Yeah.
Have you found something that has been a reoccurring issue for traders, that they have the wrong belief or the wrong thought? Like, if I can just do this, I'll be just like Mike. Can you share what you think that might be for some?
I think some of the most common worries are that I want to have a 100% win rate, and they don't embrace the losses, right? My biggest thing lately is I tell people that a lot of these fours out there, they trade in cents, not percents. So if I can't make 10% on a stock, then I'm not trading it, So for people that make that 5 or 10 cents, like, show me, relatively speaking, what is that on a 2 hour stock? It's nothing, So I tell people, if you cannot make 10% at least, then there's no trade. And I think that too many people out there teach high win rate strategies when the big statistic is like 10% of people make it. So why would you teach those high win rate strategies? I prefer to teach those risk aversion strategies where you make 3 to 1, 4 to 1, sometimes 10 to 1. And you can trade less and make more, as opposed to sitting here all day, every day, scalping away.
So are you, just from hearing you say that, is it often that maybe you don't trade in a day? Or is it Or is there always for you what you like to how you see things? There's always potentially a 3-to-1, 4-to-1.
So I mean, I have basically after longing year one and then shorting for a couple of years, I have enough setups where I can trade every day, especially in this market. But there was like 2 days last month where I didn't trade. I think 2 days in March I didn't trade. So there are days where I take it easy, but just because I do it full time, I try and find something to trade.
Yeah.
But I'm definitely not forcing it just to make like, my 10-cent scalp on the day when it's slow. I'd rather just take off, and go hang out outside or work out, Too many people, I think, the forcing the trades every day is the biggest thing. Like going back to the TurtleTraders, if you ever read that book, like those guys had a ping pong table. They would find excuses to not trade. So I lately try and look at trading that from that aspect as opposed to let me just make my daily goal,
So how long have you been trading since you left your job?
This is year 5.
Nice, man. And when did you start to? So you found consistency after year one, really, or
yeah, I mean,
sooner?
I've been profitable every year. It's just the scalability, over the years.
So scaling, was there a point in your scaling that it was difficult in terms of maybe up here?
Yeah, so I think after like year 1.5 to 2, when you start to try and dabble with like 10,000 shares or higher, that's definitely where I think the mental hurdle comes in, because every 10 cents on any of these sub $10 stocks, right, is $1,000. So most people, that's a huge dollar amount. So I think starting out, like I'll never forget year one, taking like a $1,200 loss and just being like, ugh, like, but the analogy I use is boxing. Like if you get punched in the face 30 times, 31 doesn't feel too bad anymore,
That's a good point. And what do you suggest people doing? What do you suggest for people who are growing, like who found what works for them, right? They're doing well, and they're starting to size up. Maybe they're only risking there's a couple of buddies of mine who finally found their consistency and they're making they're risking 10, $20 a trade and they're slowly growing. Like, how do you recommend those people who are trying to grow their small account but not trying to grow too fast where they make a big mistake?
I think you want year one, or even for some people, depending on, everyone's different, right? Year 1 to year 2 is proof of concept. So you want to prove that your edge works, and then consistency on your end. So you can't really scale up until both of those are proven, right?
Yeah.
So once I started to, use TraderView, you look at your trades. Once you identify what works, then you can start to say to yourself, okay, now I can start to maybe put on a little bit more size incrementally, to certain setups. But it's like I said earlier, like you can't open up your first pizza store and then year 2 you have 30. It's the same thing with trading, right? You take one fat loss, and then I think mentally it's tough to come back from if you weren't prepared or mentally ready for that level to begin with.
So how do you make yourself comfortable with taking losses?
I don't really think there's any easy way to to explain that, because what other job can you go to and put the hours and time in and you lose, like, hey mom, I just got back from work, I lost $700 today,
And then you're like, hey, but babe, or I'm talking to my wife, like, but babe, I traded really well today.
Right.
And they're like,
what the hell are you talking about?
What do you mean you traded well? I was like, I respected my plan, respected my risk. It just didn't work.
Yeah. It's very strange. That's why I don't really find comfort in talking to everyday people about this. Only like people that have some experience, right? Because like, number one, you're just like, dude, I don't care what you have to say, because there's going to be no mutual ground where we understand each other. Yeah. And most people just don't get it, especially what we trade. They don't even, CNBC is not mentioning these stocks, So it's like, I can't tell them that the Dow was down 1,000, but I was trading the stock up 300%,
Yeah. I'll get calls from buddies who they'll be like, oh my God, like the SPYs, when the SPY started dropping finally for the first time, they're like, you're probably killing it. And I was like, I was doing well, but that's just not why. It's like, it has nothing to do with the SPY, but I hear
like, I didn't check the SPY today. What's it at?
Yeah. And then they're like, what? You didn't check? Yeah, it's funny. I want to know, what was the hardest thing for you? What has been the hardest thing for you, whether it's now, and when did it happen?
I think that the hardest thing was upping my risk tolerance, because I'm a I think I found success when you go into a trade and you say to yourself, all right, I'm accepting to lose this dollar amount, but in return to make this. And I think that's hard because most people, I guess, will cut out of the trade before they hit that loss. And therefore, you're not letting that edge pan out. So I think growing that risk tolerance, like for me on a daily basis, I've had my fatter losses, but I'll try and risk if I'm trading like 2, 3, 4,000 on a trade. And that's very uncomfortable for me year one or year two. It was more like 100 to 400, Right. So getting to that level was definitely one of the harder parts, I think.
And what helped you with that?
It happening over and over again.
Yeah, just keep on doing it. Just keep on doing it. Okay. And what about today? So no matter where you are as a trader, you're 5 years in to I have a buddy of mine, his name's Scott, and he's in his 50s. And I call him old man. He's been trading forever. He's a great guy, great trader. And all I know is that like everyone's growing always. Yeah. So I'm curious, like what is a challenge for you right now, or something that you're working on to be better?
Honestly, I've been, this year especially, I'm really trying to up my size and scaling my strategy. But I think more so it's managing the mental aspect on a weekly and weekend basis. Like we were supposed to do this podcast yesterday. I was like, I'm going to hit the beach, dude, because I need to recharge mentally. And I don't think, like in my room, I'm a big provocateur of psychology in this. And I don't think enough people respect that part of trading. Because I think that you can be less smart and be a better trader if you manage your psyche and discipline better. People associate like, oh, you're a stock trader, you must be super sophisticated. Like, I think you can agree, some of the guys that make the most money are just regular dudes, right?
Yes.
So I think this year I've started to embrace that more so. On top of moving on each day, like my term that I say is today is not yesterday. So like however I traded today, like today was a good day, but I'm completely forgetting it tomorrow. Because you can bring those emotions into tomorrow, whether you're cocky because you had a great day or whether you're just depressed because you had a bad day. The emotional reset is another thing that I've been working on this year.
Good, man. I'm glad you brought up the whole psychology aspect and how you really pay attention to that. So there's a lot of people out there who are in that boom and bust cycle, right? Like they do really well, man. Like Mike, I'm sure you have students like they're like, Mike, I'm doing well. I've been 3 months on fire, and then in one day, or maybe even some people a week, but some people one day they lose 2 months, a month's worth of profits, and then they just snowball.
Yeah.
And a lot of it has to do with mindset. And after that first loss, what do we recommend for those people who just like, God damn it, like I found my success, but I gotta fix this snowball effect that always happens when I get to why.
Yep. So I think that what I tell people is after a big loss, if you're willing to trade the next day, you drop your size to, I call it BDS, baby dick size. And actually some girl in my chat room calls it like BTS, itty bitty titty size for girls, where you just need to be green, right?
Yeah.
Like whether it's $100 just to regain that confidence, right?
Yes.
Or you take off completely. And I'm not a big believer of taking like a week off. You take a day off, because then it's like, using sports, like Tom Brady, he can take a game off, but if he takes 5 games off, it's a bigger difference, right?
True.
So I don't think if you take too much time off, you won't get back as fast.
But Mike, what if I take small size and then I'm kill it on that next day, and then I think, oh my God, if I would have took that normal size, I would have made all that money back. That's that problem too, right? That people face.
Hindsight, right?
Yep.
Coulda, woulda, shoulda.
The only reason you trade it well, buddy, is because you trade it really small. That's
that's another thing, right? It's like size is, in my opinion, very overrated. At least for people that just focus on 1 or 2 stocks a day, where I'm a big believer so if you have a 60 or 70% win rate, if you trade one stock and that gives you back 2 months of gains and then you walk away, well, technically you didn't let your edge pan out because you're basing your end goal off of one sample size, right? So if you trade multiple stocks and keep your sizing small, I think that this is a mechanism that keeps people safe over those big ass blow-ups, you know?
Absolutely. And so speaking of determining the risk and size of your account, whatever it may be, not account, but just the size of your trade. There's some people who are out there who say determine what you want to risk per trade. There's some people who say determine what your max loss is for the day and then divide that. And then there's some people who just say risk a set amount of shares or whatever it is per trade. Where are you at and on the spectrum of there?
So I think that when you're first starting out, you should have a max daily loss just for protection purposes, right? Mm-hmm. But I found that anytime earlier in my career, I could take a big loss, but it just meant that I'm early. So technically walking away is not the solution, right? But you don't have the mental capital to reattack. It's not even the physical capital, right? It's the mental. So I tell people that you base your size off of the risk aversion offered. So setups that can make you 30, 40%, you should take the most size on those, therefore have bigger risk. And my sizing is predefined for that. And then setups that you only expect 10, 15%, you have smaller size and smaller risk. I don't really believe in, technically, if you're keeping your loss amount the same for each trade, then you're treating each trade the same now, which I think is wrong when it comes to trading.
Understand. And so you like to, when the cards are stacked in your favor, you want to go bigger.
Yeah.
And when the cards are, a good odds trade, you may take a smaller size position.
Yep. And all that's premeditated. I'll have, based on the price of the stock and the risk aversion offered, I have all predefined sizing. So I know, nice. Okay, this can offer me this. I'm going to size with this,
Okay. And so for the ones who heard you say at the very beginning, for beginners, have a max loss, how do you determine, how do I determine that?
I tell people, from just a rule book standpoint, 2 to 3% of your cash account should be your max risk.
For the day or for per trade?
Per trade.
Okay.
Because I don't really think, it all depends on, everyone's different, right? But
true.
Like a $5,000 account, then, to risk $100 to $150, I think is reasonable, Mm-hmm. And then you can take 3 trades. And if you're sticking with that 3-to-1 risk reward, you could be wrong on 2 and still make money, right?
Absolutely. And so what would be, if you could go back, if you can go back to right when you left the corporate job, right? And you just started doing your own training, trying to learn how to do this thing. What word of advice, or if you could tell yourself anything to get yourself to where you are today a lot quicker, what would you say?
I don't even think there's a fucking answer. I would have said, honestly, not gone to college and start trading at 17.
Yeah, no, I agree with that 100%.
Right? It's the learning curve. And I think everyone's learning curve is different, So the earlier, the better, because you could afford to risk more if you're younger. Most people can't start at 40, 45, 50, right? You have too much overhead or responsibilities. I don't really think there's anything that can prepare you for the emotional battle that exists in trading until you put in the screen time and experience it, right?
Yep. And speaking of that emotional battle, we're talking about days where you just, especially when you're new, days where you just feel like, what the hell am I doing? Like, yep. why did I even, like, for me, like, I left a great corporate job and I was like, I'm a fucking idiot.
We're like, I can't really talk to anyone about this because they'll bring that doubt out, right? Like,
Yeah. So speaking of that, and then right before we wrap this up, I just want to know, there's a lot of comparison, right? There's a lot of, especially for me, I'm gonna admit it. A lot of people know this who follow the show. When I first started, and when I was finding my consistency, like I would always I would compare myself to like the next guy who's making killing. Like we might both trade the same ticker, we may have both made the same percentage, but because he's trading a lot bigger, it would make me feel less of myself. So like, what do you suggest to people who may be stuck there where they're constantly like, maybe they're following you and they respect you and they love your trading, but then they're like they get jealous. Does that make sense? Like how do you help them fight that, or any recommendations?
So that's where social media is pros and cons, right? So I'm a big believer you curate the information that you take in mentally, because if you follow too many people, then those biases kick in. Comparison bias, right? Like how many times I'll be up nice on the day and be like, man, how much did he make? And I'll just feel like shit after, right? I think that you need to have a balance between healthy competitiveness because, I didn't really realize people could make as much as they do until like a couple of years ago when you find people on social media, and it's because of them where maybe you start to push it because you realize it's possible. But then if you take it as, like as a, sour and you get all mad, then I think that's where the balance needs to occur because there's so much resources now. You could learn for free, basically, if you follow.
You really can. Yeah, you really can.
People.
It just might take you a little bit longer too, because you got to like wish it, go through it all. Yeah. That's the other thing. A lot of people who enter trading, and I definitely am the victim of this. We come in and we're like, all right, show me how to make money so that way I can become a millionaire tomorrow. And I just need to know that one pattern, like what's going to make me money. If for those people who are listening, this is going to take a lot longer than you think.
Yep.
And there's some people like who kill it in like a year, who just murder it. And that's okay. Good for them. It doesn't make them better than you. It doesn't make it just, everything's a perspective. There's some people who don't have anything else to do and they can just watch all day. There's some people who are listening who have a full-time job, who have families. It's going to take you a lot longer. It's going to take you a lot longer. So if you're listening to this, just make sure you take your time. And Mike, thank you so much for sharing everything. I want to know, just in case people have questions and they want to know more, how can they find out more about you and where can they reach out to you at?
So you can find me on Instagram, Trade Like Mike. My Twitter is Risk Life Mike. And then I have a YouTube channel that has a couple of videos on it as well. It's Trade Like Mike. I keep everything's pretty private. I'm not out there with ads and stuff like that. But my Instagram, if you hit me up in the DMs, I'm pretty sure I'll answer the next day or two.
And you're going to have a documentary come out like The Last Dance.
Yeah. Hopefully. That would be nice.
Yeah, that'd be great. All right, my man. Well, look, thanks you so much for being here today and being part of the show because I'm sure you helped a lot of people listening. So thanks again, man.
Appreciate it, buddy.